Hi everyone, and welcome back to Everything Tesla Stock. At the beginning of June, Tesla actually filed for a 3-to-1 stock split. Considering the dip, many investors did not see this coming, so if you're interested in learning more about the split, well, you better keep watching this video. Given the overall economic slowdown, many stocks have been sinking, including stocks of large companies. Fate did not spare Meta, Amazon, as well as Microsoft in terms of declining stock prices. However, to no one's surprise, Tesla stock has also been on a downward trend. Despite the stock price plunge, many of these corporations are flourishing and are not too worried. In fact, they view the decline in stock price as a normal stock market response to many economic and geopolitical factors that are currently occurring and affecting the economic situation all over the world. According to VP at JP Morgan Chase & Co. Adam Jonas, the current electric vehicles market is a race, and he believes that Tesla is thus far winning. Mr. Jonas also compared the EV market to a marathon. He holds that Tesla is leading, hitting mile 21, while other companies are way behind at mile 2, and some are still tying their shoes. Adam Jones also claims his view on the situation is supported by the recent EV delivery track record. According to him, this proves that Tesla is well on the way to leading and becoming stronger and stronger as the marathon goes on. He believes that any new information about Tesla is bound to stir interest, including the recent 3-for-1 stock split announcement. So, what is a stock split? Well, a stock split occurs when a corporation decides to increase the number of outstanding stock shares. This action leads to a decrease in the value of each share. As Forbes puts it, a stock split is when a company issues extra stock shares to the existing shareholders, sans diluting the value. So, what does this mean for investors? First of all, considering that the price of each share goes down, it means that buying the stock is going to be more accessible. More people can get their hands on it, but it is advantageous only to a small number of people, as most brokerages provide an option to buy fraction stocks. Therefore, people do not have to pay for the whole share if it is too expensive. It's important to also bear in mind that splitting a stock does not lessen a company's value. For example, an investor owns one share issued by company X worth $100. If company X then decides to do a 2-for-1 split, the investor will now own 2 shares worth $50 each. Therefore, the investor still holds the same monetary value, but it's now got 2 shares instead of 1. An interesting fact brought to light by Bank of America research shows that these corporations already engage in stock split actions, generally to outperform the overall stock market. Why is that so? Well, one of the explanations is that people rush to buy stocks after the split now that the stock is more affordable. Therefore, companies with expensive shares tend to go for stock splits, and that makes their share and stocks more accessible to investors. The Tesla stock split situation is not that straightforward though. Considering the economic slowdown generated by geopolitical tractions and post-COVID falloff that impaired Tesla's factories, Tesla's stock has actually been down. Another one-off that has had a negative impact on Tesla's stock price is Elon Musk's proposal to buy Twitter for $44 billion. This has been disastrous for Tesla's stock, because Musk financed the offer to purchase Twitter by selling 5.2 million shares of Tesla stock. A few weeks ago, Tesla submitted to the US Securities and Exchange Commission a 14A form explaining the company's strategy for the annual shareholder meeting that is expected to occur on August 4th, 2022. In that filing, the EV giant described numerous agenda articles, including the intention to execute a 3-for-1 stock split. This initiative will triple the amount of existing Tesla shares and will also decrease the price of a single share by 3. As we mentioned previously, this is not going to affect the value in any way. The decision to do this 3-for-1 split was initiated by Tesla's board of directors. According to the board, one of the reasons why they decided to implement the split is to make the stock more available and affordable for the general public, as well as Tesla's employees. It's an admirable resolution, as it grants access to the stock to the people who could not participate beforehand. Quoting a statement from Tesla's 14A filing, "While this value appreciation has led to our employees benefiting enormously through the years, we want to make sure all employees, no matter when they join, have access to that same advantage." What is somewhat surprising is that the board of directors' decision to go for the split came after Tesla's stock prices plummeted by 42% at the beginning of the year. The split announcement positively affected the stock price, as it increased by 1% in a mere hour after the news came out. According to the mentioned 14A filing, the primary purpose of the authorized shares amendment is to enable a 3-for-1 split of the common stock in the form of a stock dividend. The filing also mentioned that on the 6th of June 2022, Tesla issued 1,036,390,569 shares of common stock, and that the amount of authorized shares of common stock is 2 billion, which is not enough to execute the 3-for-1 split. 14A filing also mentions that the split will be approved by the board of directors if stockholders consent to the amendment of the authorized shares. As we mentioned before, the said stock split will be carried out via a special dividend payment to the investors. Coming back to the justifications of the stock split, we quote that the statement in the 14A filing is as follows. Our success depends on attracting and retaining excellent talent, and that highly competitive compensation package is offering every employee an option to receive equity helped Tesla to do that. We believe that the stock split is going to help to reset the market price of our common stock so that our employees will have more flexibility in managing their equity. This is not the first stock split in Tesla's history. Back in 2020, on the 11th of August, the company announced a 5-for-1 stock split, which was carried out a few weeks later on August 31st. Before the first stock split, Tesla's share price was $2,213. The stock split and lowered the share to $442. The share price of $2,213 was triggered by the stock split announcement. Before that news, the share price was $1,300. A part of the statement also specifies that Tesla is looking to increase the number of authorized shares of common stock by 4 billion. The company states, our certificate of incorporation currently authorizes us to issue 2.1 billion shares consisting of 2 billion shares in common stock, par value of 1/1000 of $1 per share, and 100 million shares of preferred stock, par value 1/100 of $1 per share. The authorized shares amendment allows Tesla to raise the quantity of Tesla common stock from 2 billion to 6 billion. The amendment will not change the total number of authorized shares of preferred stock, only the common stock. Quoting Tesla's statement, we are submitting to our stockholders a vote to adopt the inclusion of certain provisions in the proposed amendment certificate to increase the number of authorized shares of common stock by 4 billion. Another gripping piece of information revealed by Tesla in the 14A filing is the fact that Larry Ellison, a board member of the EV company and famous US business mogul, owns 1.5% of the company's shares. Mr. Ellison intends to renounce himself as a board member. Other significant Tesla shareholders are Vanguard Group with 6% of the share, and of course Tesla's CEO Elon Musk with 23.5% of the shares. Elon Musk let a lot of his stake go when he bought the social media networking giant Twitter by selling off many Tesla shares. Today, Tesla's shares cost $703, and it's got a market capitalization of $720 billion. If Tesla's stock will not fluctuate much and the 3-for-1 split goes through, then after the split, Tesla's stock is going to be about $233 per share. There's also talk of Tesla wanting to ask its shareholders to vote on decreasing the term's length of the board of directors. If this request is approved, then the board of director members will hold their positions for 2 years instead of 3. Let us know your opinions on this 3-for-1 stock split in the comments down below. Do you think it's a positive tactic in the current economic climate? Thank you for watching, and don't forget to click on one of these 2 videos on your screen. See you there!